Hey, welcome to the exchange. So this report dropped last month. This is basically a report on institutional buyers for single family homes. This is from the National Association of Realtors. I'm gonna drop this report in the comments down below or the description down below. That way you guys can look at it in your own time if you want to the full report. I'm gonna go to like two slides real fast. I'm gonna show you some thoughts I think are very interesting. So this is looking at the actual national level, basically institutional buyers by percentage. So basically, the higher percent you have, basically have more institutional buyers in that state itself. And really, we can see here, I mean, anywhere sunny, basically the South right here, I mean, it's just heavy institutional buyers. You know, Northeast and Northwest, not that many. California, not many at all for obvious reasons as well, too. But I mean, looking at here, I mean, like Georgia, Alabama, Mississippi, I mean, 17, 18, 19%. I mean, Texas down here is the absurd one, 28% institutional buyers. I mean, it's just crazy right there. Again, Florida, 16%. So, I mean, really, you can see here, I mean, it's just strong, heavily kind of buying really down south and kind of these sunnier areas. But typically, historically, cheaper areas, though, too. So, I mean, not the Northeast, not California, not Washington. Typically, they're cheaper price points on average for compared to most of the country. So this is the other slide I want to show you. And this is institutional buying of single-family homes versus the median price. So the median price is basically 1.0. So it'd be like the average price in an area itself. So if you buy below that, so let's say 0.5, you're buying 50% below the median price. If you buy at 1.5, you're buying 50% above the median price. So basically looking at a pricier homes versus cheaper homes, etc. We really see here, I mean, across the nation, on average, these are well below one typically, which basically means they're buying cheaper homes in general right now, kind of the affordability or affordable housing you have right there. Now, there are exceptions there, like, you know, Utah, Kansas, Texas. I mean, Texas is well above the median for that. But when we look at here, like the hot buying was kind of in the southern states, kind of the sunnier states in general. I mean, it was well below, you know, 0.6, zero point 0.6 in Arkansas, 0.9 in Georgia. It's well below those kind of 1.0 points. No, Nevada, Utah, Arizona, not quite as bad. Basically buying at the median price there too. But what happened is you basically had an entire rush of institutional investor money in the South down here. But then you had basically a mass amount of money chasing basically very cheap homes, which means you can basically buy a lot of them in general right there. And that's why we're having kind of this crisis we have now, which it won't last forever. It will shift basically as the economy shifts around a little bit there too. But I just want to point out to you, this is I think, very, very interesting. It kind of shows the overall macro trends for the overall real estate market for institutional buyers. So what's the so what here? What's the risk factors here? So, I mean, this has been massive appreciative to the housing valuations across the country. We've seen it across the board. I mean, buying a home in the South right now, I mean, it's just very, very expensive, whether you're buying, you know, cheaper homes or more affluent homes, etc. Now, the risk is going to be is that the market shifts and prices start coming down over time. What's going to happen with institutional buyers? Because I mean, if they pull out these positive trends in the deep South, what we've seen in the past, you know, year and a half or so, it could flip. It could go from like basically buy side pressure all of a sudden to sell side pressure. And if that's massive sell side pressure actually hits, I mean, it could bring houses down very, very, very fast, which is good for consumers. I mean, it's bad for homeowners potentially though too. But again, we'll see. We just don't know what's going to happen with interest rates as well as overall market economics with basically recessionary fears, etc. But again, I'm gonna keep an eye on this one and kind of see kind of where it goes in the future. Hey, be sure to sub the channel right there for content just like this as well as updates. Also, be sure to drop your comments about the overall real estate market down below. But yeah, that's the exchange.